tip is going to be on simple interest, but this time simple interest with DIRT. So we already, I suppose if you haven't watched the simple interest calculation, please go back and watch that first of all, and then turn to this one. So as explained previously, simple interest is the type of interest where you put your money in the bank, that's what you invest, and that's the only amount that the bank will ever recognise for putting interest, adding interest on. Okay, they don't take into account that you've earned interest after year one, and that they'll add that on to the amount when they're calculating year two. They'll only ever work off of the figure you invested. So for example, in the example of Bernie Foley here, who invested €5,000, that's the only figure that they'll calculate the interest on. Okay, so that's the general principle, simple interest. What is DIRT? Okay, DIRT, otherwise known as deposit interest retention tax. This is when the government come along and they say, okay, so you've earned interest, so you've had a form of income that you've earned, we're going to take a portion of that through tax. So we know that the government taxes us on pretty much all income that's earned, so saving, our interest in our savings is no different to that. So that's what DIRT is. So that's the basic principle here, girls. So now we just have to show how we do it. So I have two questions here, and I'm going to just do them out below. So I'm going to start with question 12A. So Bernie Foley invested €5,000 for 2 years at 5% simple interest. Okay, so going back to my simple interest formula. Okay, simple interest, if you remember, is equal to principal, my amount invested, multiplied by time, the number of years I've invested for, multiplied by rate, which is my percentage rate of interest. Okay, so in this particular instance, my simple interest is going to work out, so it's going to be €5,000 multiplied by 2 years multiplied by a rate of 5%. So when I put that into the calculator, I've earned €500. Okay, so in my 2 years, that's what I'm going to. So again, girls, similar to the last question, I can be asked for this in two different ways. I might be asked for the net interest, or I can be asked for the total that's ending up in my account. I have to make sure I check the box. So this is what I'm asked for this time. It is my net interest. So I've earned €500 of interest, but not all of that is what I'm going to take home, because the government are going to come along and they're going to say, well, actually, some of that money is ours. So how do I do that? So I'm just going to work out my rate of DIRT. So essentially, girls, I'm going to take my interest, I'm going to multiply it by my DIRT rate. So my interest is €500 multiplied by my DIRT rate of 30%. And that will work out how much the government are going to take out of what I've earned. So altogether, the government are going to take €150. But is that what I'm asked for? Am I asked for my rate of DIRT? I'm not, okay? I'm asked for net interest. What amount of interest overall ends up in my bank account? So I know I earned €500. The government are taking €150. So I end up with a net interest figure of €350. Okay? So let's just do part B. So Sharon Evans invested €2,000 for 3 years at 4% simple interest. And again, I'm asked for my net interest. I always write out my formulas, girls. It's just a really good habit to get into. So simple interest is equal to principal by time by rate. So I have my €2,000 multiplied by 3 years at my rate of 4%. And again, girls, we're going to do this on our calculators. So I have €240 is the interest earned. But similar to above, I don't get to keep all of that. So I need to work out the dirt. So the dirt is equal to my €240 multiplied by 30%. That gives me a figure of 72. So what is my net interest? My 240 minus my €72. And that gives me €168 going in here. Now, girls, on the off chance, not the off chance, but if I was asked, instead of net interest, if I was asked for the balance, I'm just going to write it over here, the total balance of question A, I would add my interest onto my investment. So that would be my €5,000 plus my €350 would give me a figure of 5350. If I was asked in part B, it would be my original amount of 2,000 plus my net interest of 168. And that is simple interest with dirt.